I wish I could say I'm super excited about this about this show, because we're going to be talking about, I think, a more subdued topic, which is peace of mind in a chaotic marketplace. And boy, has the market been chaotic this year. We have shot out of a cannon, fell off a cliff, shooting back up, climbing back out. You know, where's the market going to stop? You know, is it going to be a bad year? Is it going to be a good year? I don't know if the market even knows at this point. I guess as we talk about this peace of mind, which is a very important topic, we're really going to focus in on the dividend investor. Because peace of mind in the market outside of dividend investing, I got nothing. I mean, literally, because we're talking about the market. We're not talking about CDs or bonds. We're talking about the stock market. How do you find peace of mind without dividends? I got nothing. Honestly, I don't know if anybody has any peace of mind in the marketplace, unless you're dealing with money that you don't care about.
Right. Or somebody else's, or you only open it up on days that you see the headlines are positive. And then it's just like, oh, it's green.
I don't think for today, set and forget a stock market investment and feel like I'm good. You know, normally in the back of your mind, there's this angst, anxiety, you know, you wake up in a panic, like, oh my gosh, what did the market do? Or, you know, I'm getting ready to retire, or, you know, Trump said something, you know, or whatever. The media cast, some new company came out and everything fell. What did it do to my investment? I didn't even look.
You just turn on your car and the radio is playing, and like you're trying to just have a peaceful day. And just some external, you hear a 5-second snippet of, what are you going to do? The market, and you're like, wait, what? You know, you can't avoid it.
Let's just jump into why dividend investors feel different.
Well, I love using your word that you've kind of coined over the past few months, is this tethering that happens. The great thing about dividend is you don't have to rely on just return of principal. You have this tether, the cash, the dividend that's being paid to you based on the number of shares that you own. And knowing that no matter what happens, you're still going to get paid that quarterly dividend if you've done your due process and picked the right stocks and all those things that we've covered in other podcasts. But for the most part, you know, all things considered equal, no matter what the market's doing, that dividend's going to come in each quarter.
Yeah, I think too that, you know, there's that feeling, like you're saying, that when the dividend, like if it's in one of our clients where the cash is hitting their account, that's something real that I can go get and I can do something with. Just a portfolio of growth and pluses and minuses. It's just a number, but a dividend gives me something real and physical that I know I can use.
What would be interesting is, like, you know, if you asked like a huge group of people who would do their job without getting paid, and I bet you the lion's share of everybody would be like, I'm out. Like, let me answer that. No, you know, like, and yet how many thousands, if not millions of people sign up to volunteer for something they find purpose in? So getting filled matters. And I'm talking in this example, purpose. But when it comes to your money, you still want to get filled. You want to find purpose. And I think the reality is that dividend, that paycheck, it's a lot like, you know, there are certain people that will find value in a company. Like my grandparents retired from there. You know, I have my so-and-so, I started my career there. I did training. My kids got impacted. I want to own this in my portfolio. Then you have those other people that would probably raise their hand and say, if you don't pay me, I'm not working here, which is probably the lion's share of investors in the marketplace. When you add a paycheck, it changes the equation. So it's like, okay, I don't necessarily know much about you, company or dividend, you know, but I know you're filling my bank account up.
That's it.
I'm getting this paycheck to do this job, and I'm okay with it. I might not like you all the time because your value goes down and you're not a good boss, but that paycheck, it'll keep me coming back. And I think as investors, it's that same mentality where, you know, as I'm getting paid, I'll just endure because I like that paycheck. There's certain small portion of the population where they're the volunteer type. And if you look at people that volunteer versus non-volunteers, I bet you it's a very small percentage, single digits, easy. And I bet you that relates to investors, where there's certain set of investors out there, a very small 1-digit percent, where it's like, you know what? I like this company and I'm just along for the ride and I don't need to get paid. But the majority, you need something to keep your feet in the furnace. You know, and I love the word tethering because it's like, well, I'm getting a paycheck. My bank account's getting fed. I feel good about it. Market's down, my investment's down. I'm okay with it because I need that money.
Yeah.
And that's a good place to be.
Now, if they stop paying me, then it's a different conversation. But yeah, the tethering's there.
Yeah.
Yeah. I mean, like you said, tethering, whether it's tethered or something tangible, right? Like a buy and hold or a buy and hope strategy doesn't really work as well compared to a buy and receive. You're actually purchasing and you get something in return.
That's right.
Instead of this hope or prayer that it's going to work out.
Buy and hope. I've never heard that before. I kind of like that.
Yeah.
I think that's pretty good. So let's talk about how to cope with market volatility. This is one that I feel like is very, very difficult, and it kind of get back to what you just said, Cal, in this, not necessarily buy and hold, but buy and hope thought process is like, am I going to be okay, if I don't do anything? Because I think that fear for the investor is like the $1 million question. Can I withstand this market volatility? It's dropping down. Am I going to be okay? Or is there a bottom? Because how many times have you talked to somebody and they're just like, well, could it just turn to zero? And I'm like, Duke Energy?
I mean, the answer is yes, it could.
Yeah.
But Duke Energy's been around since, I think, 1911.
Or any stock. I was just throwing that out there.
Yes, but I mean,
What other problems would occur if Duke Energy was
correct.
there?
Yes, that's the bigger thing.
We got bigger issues going on.
Yeah, yes. So it's like, yes, it could happen, but the likelihood of it is almost zero. So for me, coping with like these really big changes, you've got to remind yourself what is actually true. And that's something like we do through the onboarding process of like going back and, pull out your statement. Okay. You can look and see exactly where the companies, the holdings are paying you your cash dividend, whether that's being reinvested or coming to you in your checking account. You can also go back. There's plenty of resources out there to remind yourself, okay, this company has been paying a dividend for X number of years. They've been increasing it. Like going back to those things that are the whole reason why you purchased the stock in the very first place.
What are things that people use to cope? Forget about the market for a second. But what are things that people use to cope? Like cigarettes, food,
exercise.
Yeah, that's my big one.
Man,
leave my phone in the house and go for a walk.
Yes.
Emotional buys. I'll go shopping for lots of different things.
So, a mechanism for coping is something to take your mind off of it, something that or gives you a different perspective or allows you to
reframe. Yeah.
And I think what we're talking about here is, it's that shock of, okay, I just saw my account go down, or I saw a headline on the news and everything looks red. I've had a handful of clients that, tariffs went crazy and they send me an email. Hey, can we chat? Just want to hear your voice. And I know immediately they want to cope. They want to find out what's going on. And they'll call me up and, they'll say whatever they're going to say. And there's like, I'm just concerned. Do we need to make some changes? And my knee-jerk reaction, and I try to do it without any sarcasm because we all know I tend to be a little sarcastic from time to time, is have you looked at your statement? Like, why are you asking me if we want to make a change? I know the market's fallen X percent, 20%. Have you looked at yours? Because we've gone up, and all they're doing, and this is our natural reaction, is to jump to conclusions that when something is bad that matters, that's on TV, everything's bad.
Yep.
And I feel like sometimes people feel they need to cope when they don't, because everybody else needs to cope. With the dividend investor, they're just like, they just need to pay attention. Like look at what's actually taken place. Look at history.
Yes.
Look at the current environment. You can look at just about any dramatic drop in U.S. history and see that dividends have outperformed every other asset class, almost without exception, every single time. You can also look at other periods of time where the market's done very well and dividend investing has either kept up or was slightly behind. And you all you have to do to cope, from our perspective as financial advisors, really look at the research, look at history, look at everything and be like, oh, well, this is probably, if not the best investment strategy I could have. But when somebody calls me up or emails me or us, I just think they're not paying attention.
It's the noise, right? And they're not logging in, looking at statements. They're not looking at their specific situation a lot of times.
And I think one of the big drivers, a lot of that behavior of the freak out, if you want to call it that, is a lot of people sometimes don't understand what they own. It's just a lack of education sometimes. There's people who can weather these storms, because I can remember it's a few years back, Chipotle Mexican Grill, which I love their food.
Side note.
Side note.
Send him a burritos.
A strong, publicly held company, strong stock, right? And they had this E. coli breakout, right? And people sold massively. People freaked out.
Yeah, they did.
The investors who knew what they owned, they waited patiently and bought, right? Because they knew what they owned. And I think a lot of people, majority of people who don't take the time to understand, they're just speculating with their money. And that's why they freak out and panic, because they don't know what's going on. They don't know how to evaluate objectively what's actually happening.
Yeah.
Yeah.
Which is, it's a tough proposition.
Yeah.
So I would say on the coping, the best advice we can give investors is look at your statements, pay attention to things that aren't on the news. Like, don't just look at your value, look at the companies you own. And for our clients and for dividend investors, how much are you getting paid?
Right.
Yes.
A lot of our clients probably watch this going, I'm good. I don't need to cope. Why are you having a show about this?
Went and played an extra 9 holes of golf.
We're doing great. And there's going to be a healthy percentage, but not everybody's there. We're all on our own journey. And some are at the beginning of that journey, and some are very experienced in that journey.
Right.
And the experienced ones are the ones chuckling at home going, yeah, we're good.
Yeah.
But the ones on the early side going, what do I need to do?
Well, and
read your statement.
It takes 1 or 2 cycles of where the market kind of gets blown up for you to almost have that confidence.
Yes.
That like, okay, everything that these guys have been saying is true.
Or a couple of reviews. We look at your snapshot statements.
Yes.
You can make sense of, and I think that's where our industry does a very bad job, where you start with an advisor, he builds you a plan, and then you never see that plan again. And it's just about performance in that day forward, where we're try to continually go back to that plan and attach the statement back to that plan. And how are we progressing? What's it look like? What were we anticipating? Where are we at? Your shortfall. It's funny. We bring up our shortfall like 5 years, 10 years in to a client situation. Like, do we have problems? No, it never went away. We just solved it, and we've solved it for 10 years. And it's this big shock. And with existing clients who've been here for a decade or longer, and there's like, how is that still there? I'm like, it's like a birthmark. Yeah. It doesn't ever, it's always going to be on your body. It doesn't ever go away, but you can do things and strategize and get around that and have a strategy of dividend income that solves it.
Sure.
Yeah.
So that's where I think we do a pretty good job at times, where we bring them back to where we started, and we can show them the progression of the future through the snapshot. And we bring it to life.
The cumulative review. Yeah.
And those people that are further down that journey, they're like, oh, no, we're good. Why are you having this show?
Yes.
And the other people are like, this is good. That's I need to do this.
Well, it's like, it's a math problem. The equation never goes away.
Right.
You can solve for it, but you still have to have the equation. And if you change things, then so can your solution.
The result.
Yep. Interesting thought. I like that. Might have to use that. So another thing is the satisfaction of getting paid. So how does that change? It's very similar to the first thing we went over, is why dividends feel different. But there is something about getting paid that changes us. I've talked often about the difference between a job and a career. A job is something we do in exchange for money. A career is something we do that can define us. That is something that just becomes a part of who we are.
Yeah.
And I feel like that this paycheck can be a definition of either a job or a career, especially for an investor, because some investors put their money to work as a job, and some of it's a career. Like, this is my solution for the rest of my life. That's a career. A job is like, well, we'll see how it goes.
Yeah.
Like I'll give you a shot, see how it is.
Fun for now.
What do you guys think on this?
I hear this term a lot. I want my money to work for me.
Yeah.
Right. Well, if you're in this growth mindset and you send your money out to work for you and grow, it never really sends you the paycheck. You have to sell it to get that money. So that's a little different, where if you send out your money to a dividend stock, then the company's actually paying you. It's like your money is truly working for you.
And it probably
on your behalf.
And it feels similar to having a job, right?
Correct. And you never have to sell anything. It's like, I've put my money to work out there, and it's just going to send me the check back. Or if you send your money out to work in a growth fund, well, then you have to sell it to get it back. So it's not really working for you. It's doing something, but
so if we kept the same job equation or job scenario, the way I would say it is if I gave you 2 job offers, 2 different companies, okay, you're looking for a new job and I'm like, all right, I'm company A. Here's my job offer to you. Okay, Ryan, you ready?
Yeah.
So
I'm ready.
you're going to come to work and you're going to do X, Y, Z for this company. And based on company profits, we're not going to be able to give you a base pay. We're not going to give you any money during the year. I need you to show up every day and do a really
awesome
good job.
already.
Yeah. And at the end of the year, based on how the entire company does as a whole, if we do very well, I'm going to give you X% bonus based on the overall profitability. If company does pretty bad and we don't do as expected and things have gotten a lot worse, we're going to need you actually to pitch in to help, you're actually going to take money out of your bank account to help the company stay solvent. That's job offer A. Okay. Job offer B, company B over here, what we're going to do is we're going to pay you on a quarterly basis. Okay. And I need you to come to work every day, do a really good job. And based on how the company does at the end of the year, we're either going to pay you an excess bonus or not, but you get to keep your pay. Okay. That's job B, offer B. Which one do you want?
I want B.
Yeah. Who's going to pick A? Yet 98% of all investors in America are job A.
Yeah.
There's a mutual fund. You don't get, if you make money in January, it can be robbed in February. You make money in February, it can be taken away in October.
Make it all the way through the year.
You can go all the way to
December 30th.
Yeah.
31st,
And the market
taken away.
Takes a dive and everything you give back and you lose money. And yet people sign up all day long and all their 401ks and their everything. They're like, buy me a mutual fund because their history says good. Well, you're not going to stick around to wait to see what happens. You're going to sell because you're emotional. Yet on this side, with dividend investing, you're getting a paycheck. You might not make money at the end of the year. You might actually lose value, but you got paid. And that payment is actually going to change the game for you because you'll be like, well, if I sell, do I still get paid? No. Well, don't sell. Or buy me something that pays me better.
That's right.
But once you go dividend,
reinvest it.
It's really hard to go back to this. Like when you hear the example of what I'm just giving, everyone's like, well, you stupid. Who would do this? All of us. Everybody sitting in this chair, everybody right here in this entire room, we've all done this. We've signed up going, hey, this year's going to be a good year.
It's going to be the year. I believe in all of it. Yep.
Yes. Has Amazon ever lost money? Yes, sir. Have they made a lot of money? Yes. That's still proposition A. They don't pay a dividend.
That's it.
They're not dogging on Amazon.
No.
But the reality is that's that equation.
Yeah.
They can take your money.
Sometimes they do great. They kill it.
Sometimes they don't.
And sometimes they don't.
Okay. Last thing that I want to talk about and we'll shut this down. Does dividend investing change your behavior towards investing long term? I got a buddy in Texas. His name's Ken. And whenever you ask him a question, and he's a big kidder, his big word, even my kids refer to him as the one word he says all the time. He says, absolutely. Whenever you ask him a question, like, you want to go to get some barbecue? Absolutely. So if somebody were to ask me this question, I'm going to do my best, Ken, and I'm going to tell you, absolutely. There's no way when you go from job offer A to job offer B, you're never going to go back to job offer A. If we were to go to our client base and say to them, we're no longer offering dividend investing.
We're all SPY.
Yeah, we're all going to go to growth. We're going to become the best growth investment advisors out there. And we're going to just have a buy low, sell high. And we're going to give your investments the best chance they can to grow. And don't worry, your income is going to be taken care of. They'd probably be like, no, thank you. I'm just going to keep the investments I have. I'll figure it out.
Yeah.
Have a nice investment journey.
Yeah.
Once you experience this, they'd all fire us. Once you do this, like, I can't tell you how many times in my career, even long before we did dividends, that I would have a new client sign on and they're like, listen, I'm fine with 98%, 99% of anything you want to make a change to in my portfolio, but I got this Target, I got this Walmart, I got this dividend stock in my portfolio that my dad had since the day he started working at Sears Roebuck or whatever.
Right.
And don't you dare sell that.
Yep.
I want to keep their sentimental value and it continues to pay me this paycheck. It's not much, but don't sell that.
That's right.
Why? You got to step back and go, why? And it wasn't until we started doing it like, oh, I know why they're doing it now.
Yep.
Why weren't they going, hey, can I get more of that?
Yes.
They didn't know what they had. They just knew it was good.
And grandma said, don't sell it.
Yeah. And then we've had
and why? Because grandma was living on it.
And we had it in our portfolio for our generation, our family for 50 years. And now we've armed our clients with tons of those. So if they were ever to interview somebody else, they'd be like, yeah, no matter what you do, don't you dare sell this.
Yeah.
Yep. I mean, that is the vast majority of locked stocks in our portfolios for our clients is dividend payers. They're like, moving over, but just please don't trade out of that one.
Yeah.
And it's always that sentimental like piece, but it's because it's provided income for their family and their heirs before them.
What do you guys think? What do you think?
It's always shiny. It's always attractive. I relate it to like a good fishing story. You know, everybody wants to catch that big old trout or bass, the big, you know, the 12-point buck whenever they go hunting.
Hit that home run in college or high school.
But now being on this side of it for as long as I have, I don't know that I would do it with any money. It would have to be surplus.
Yeah.
I would have to know that my needs and what I want to live on in retirement, that's good. We're squared away there. And now I have this extra. And now let's have a conversation of maybe kind of going for some things. Yeah. But on money before I'm at that spot, why?
But the hard part on that is we've done all the research. Like we know, even with the surplus,
even still,
it's an ending game of disappointment if you go growth.
And I think the only way it would be for me is to like cherry pick certain stocks that could, you know, it's like taking flyers, you know, you just kind of the roulette wheel.
Because you can win in growth, but it is a very difficult game and it's short term.
It's so hard. Yeah.
Yeah. Any closing thoughts? This has been fun.
No, this has been great.
Yeah.
Yeah.
I think just the big takeaway for me and something to remind everyone of, just remember why you even started investing in the stocks that you have in your portfolio, right? When you hear headlines, when you read things, remember why you even started to invest in those companies, and then just remind yourself of that and go for a nice long walk.
Patience is your best friend, you know.
That's for sure.
When I think of, you know, this entire show, which is peace of mind in a chaotic market, you know, going back to what you said, you know, why do you own what you own? Why do we do what we do? And if you don't look at your portfolio with peace of mind, knowing wherever it's at, then you probably need to ask yourself, is this the right place for me to be? You know, if it's not solving your income needs and it's just there to grow to some value, you probably need to step back and go, maybe I need to do a little bit more research on what this dividend investing thing is. Because there's so many of our clients watching this, they're like, yeah, I got this. Like, we're good. I don't need to look at anything. There's other people out there going, hey, what am I missing? You know, and it's that person going, well, if you don't have a dividend portfolio or don't have dividends, you probably need to go figure out what you're missing out on, because those investors are completely different than everybody else.
Yeah. Mm-hmm. Get educated, invest in what you understand.
Yeah. Well, thanks for watching. It's been a good show. Thanks, guys.
Thanks.